Now, the construction side of it is going to be a little different than you would if you was just renovating a apartment building, or talk to the people about how that renovation side of it looks.
Yeah. So again, we bought somebody had built one and they
Mhm.
weren't a good operator. Again, you got to be a good operator, and they ended up
Right.
losing their license. And so we bought it. It was built in 2020, so it's like 6 years old. They purposely built it. And then
Okay.
on the other side, we're finding homes that are convertible. And those convertible homes, we're able to convert the home and then turn it into assisted living facilities. So there's lots of different ways. And there's folks, of course, that do bigger developments. We're not into that space at this moment in time. We're more into the small care units.
Okay.
But there are some that are much bigger.
Welcome to the Real Deals Real Estate Show, a show where we break down real estate foreclosure and private lending in a way that actually makes sense. No confusion, no noise, just real conversations, real strategies, and real insights you can use in the real world. I'm your host, Donald Torrance, and this is where we cut through the complexity and get straight to what matters. Now let's get into it. I'm looking at some information they sent on you. It's like, wow, you've been, and it seemed like it's a short time, but that's
Seven and a
almost,
half
you're
years.
almost 10 years in.
Yeah, 7.5 years. Yes, sir.
Yeah. So you've done some great syndication, you've done some commercial deals. You've been around the block.
I have. Yeah, everything's been in commercial real estate. Started out as a passive investor and then switched over to a deal sponsor.
Oh wow. Okay. That's good stuff. So why don't you tell the people that's tuning in today a little bit about you and let them know a little bit more about where you come from and how you got started in real estate.
Perfect. I'm happy to do it.
Let's dive into it then.
All right, so we're ready to roll. All right,
Yes,
so
yes, sir.
so thanks for having me, Donald. My name is Trevor. I was always interested in real estate, but terrified of toilets, tenants, and trash. So I just didn't want to get into the single family owning homes and different things. And I
Mhm.
always thought that I had to be a millionaire to invest in commercial real estate. Then the company I worked for got bought out by a private equity group. I worked for iFly Indoor Skydiving, by the way, for 20 years, opened 46 of 80 locations all over the world. And I got a decent payday, and I thought, oh, it's time to learn about commercial real estate then. And I
Wow.
actually went to a 3-day seminar, and they talked about this thing called real estate syndications. And I'm going to be honest, I went, where have you been my whole life? This is exactly what I'm looking for. And what
Uh-huh.
a syndication is a group of experienced real estate folks. They'll buy some commercial real estate, they'll secure all the debt, they'll take care of all the operations, but they need passive investors to be able to invest into the deal so that they can close it. So a good example is we're going to buy a $10 million property. I know that sounds crazy. It's a very high number. And they'll get a $7 million loan, and then they'll raise about $33 million from the passive investors. But here's the real cool thing that I did not realize. First of all, I didn't have to be a millionaire to invest. And secondly, the people that put up the $3 million in cash actually own 70% of the commercial real estate asset. And I thought, this is crazy. Where has this been my whole life? And so I started passive investing. It's been 7.5 years now. And those folks that are passive investing are called limited partners. So I was a limited partner in 20 syndications. And then I thought, well, I like this. I'm going to switch over and also be on the active side. And so currently I'm actually raising capital. That's my role within the group. I raise that capital from the passive investors, and I'm on my 20th deal there. So been really busy in 20 years. But again, the beautiful thing about syndication, it's a team. I am just a part of a team. I'm not doing this by myself. So hopefully that was a good overview.
That was, and it's a lot of takeaways there. And a lot of people need to understand that this isn't something that you can just jump in. You had a mentor that
That's right.
actually gave you some guidance and some footing to actually
That's
get
correct.
to
And
get
and
going.
even if the mentor helps you get active, but on the learning side, you just really need to find somebody I call it that you know, like, and trust. Okay,
Right.
because you're going to be giving them a big chunk of your life savings, right? Minimum investment is usually around $50,000. The deals are normally about 5 years long. But again, the goal is to double your money in 5 years. And you get to own a piece of real commercial real estate. You get all the tax advantages that come with owning it. You get all the benefits, but you're sleeping while we're doing all the work,
Right.
and you're making money while you sleep. The work great Warren Buffett says, you don't find a way to make money in your sleep, you work till you die. And this is just a great way to create some passive income streams to grow your wealth.
Right. Now, let's talk about some of the deals that you're currently in.
Yeah.
They all commercial. So what are they? Storefronts or
Yeah, so the majority of our deals are what's referred to as value add multifamily. And
okay.
value add multifamily means we're buying an older complex. I got a friend that says we're buying B and C, bad and crappy, but it's not
I
really
like
like that.
that. I like
And
that.
we're buying apartment complexes where the current ownership is, they've done their cycle, they're ready to move on. So we'll buy them, we'll renovate them, we'll start to increase the rents. And so a lot of people don't realize how you can create value doing this. So because commercial real estate is calculated very different than single family. So let's say I could buy in 100 units on an apartment complex and
Mhm.
I could increase the rents $100 per unit. It's not a lot, right? $100 per unit. That actually creates $2 million worth of value. It's kind of mind-boggling. But
Right.
because the commercial real estate is based on the net operating income, how much money you make, divided by the cap rate at the time, it's pretty crazy that all I've got to do is make the apartment complex a little bit nicer, put up the rents about $100 per unit. And so again, you think our $10 million apartment complex, and during the first year, we fix it up, we start putting the rents up, and by year two, it's worth $12 million. That's what we call forced appreciation value add apartment investing. So that's what most of our deals are. Now, we also do some new build retail because retail has been very popular, and we're not talking shopping centers, we're talking more lifestyle centers that are in new neighborhoods. So again, we'll find out where people being developed. We'll buy the land, get it entitled, build the retail, lease it out, and then sell it to somebody else. Those cycles tend to be about 3 years. And then one of the other asset classes that's really been good, and we closed on a deal about 2 months ago, is assisted living. Assisted
Mm,
living is very profitable, but it's very specialized. So
mm,
much different than other businesses. You know, you're taking care of people's moms and dads, right? There's a
right.
huge responsibility. And the opportunity I'm involved in, it's with a couple. They've been running in assisted living for 10 or 8 years. And our units are smaller. So there's 16 beds because that's where in Texas you can get by with 16 beds on one license. So we bought a building, two buildings side by side that have 32 beds. And then again, you're putting folks, elderly folks in these. We're not a government run. We're not like where I used to keep my papa. You know, I used to be so sad when I was a kid and go see him. And it was one of those, you know, more like a hospital
Hospital. Yeah.
than a home. These are more like homes, and we turn them into them. But you can get anywhere from $6,000 to $9,000 a bed a month. Now,
Mm,
don't get me wrong, you got a lot of costs, right? Because 24/7, you're cooking all their meals, you're doing their laundry. But if you're a good operator, it's a great space. And obviously, with the silver tsunami, there's a lot more people that are needing this.
wow. So let me stay there for a moment because you in my space a little bit. I
Yeah.
do independent housing.
Okay.
Um, now, are you doing two people per room or are you doing
So ours
individual?
are one person per room on the way that we're doing it. And we're
Okay.
doing it two ways. One is in a bigger house that you're converting garages and other spaces to bedrooms. But our particular units are either a multiple bedroom, multiple bathroom house, or the one I talked about was actually a purpose-built building. So there
Okay.
are 32, and let's call them little studio apartments. So they
Mhm.
have a sink, a bathroom, a bed, and a seating area, and it's their space, but they come out every day for meals. And so
Okay.
they're always coming for meals, going back and forth. But again, you need 24/7 coverage. You need people to be able to help them and do the different things they do. But we're doing it to where they're in individual bedrooms. But there are some places that do maybe two beds in a room. There are places that allow couples to come in. So it really depends. There's no one way to do it.
Mhm.
The most important thing is that wherever you invest in that space, you're investing with somebody that knows what they're doing, because this is the highest touch point of any commercial real estate, right? In our retail spots, we build them a shell, they put their store in, and they run their business. We don't do
Right.
anything, right?
Right. Right.
Multifamily, people come and go, and we fix their toilets and sinks and clean up the place, but we're not really. But on assisted living, you're feeding, clothing, bathing, providing emotional support. You want to create a really great place. And
Mhm.
if you do create a great place, you can charge a premium for that, because this is the folks at the last sort of stages of their life. And you want to make it feel more like home than going to a hospital. Big difference.
Mhm. So do you like the assisted living better than the apartment space?
So better than is a different thing. So
Okay.
so so it's definitely what I'm going to call the new space, because so many folks are getting older, we're
Mhm.
living longer. Our whole society has changed, right? Like both mom and dad, husband and wife are working. They can't take care of the parents. I mean, in fact, the couple that we're partners with, they were trying to take care of their mom, and he was a full-time worker, she was a full-time worker, and they could, and so they started looking for a nice place to put her, and they couldn't find one, so they decided to create one and
Mhm.
learned about the space. So again, I like it because it's the growing demand, right?
Okay.
It's a really growing space. We're living longer,
Mhm.
and we reach this point where it's just American culture is not the same as other cultures, right?
Right.
We don't have three generations of people living under one roof. There are lots of cultures that do, but it's just not what we're doing. And
Mhm.
but again, you want to put mom or dad in a place where that people are taking care of them and they're nice. And again, normally what will happen is mom or dad will sell their primary residence, and that will fund where they're going, and that's how you can do it.
Okay.
So again, it's a very exciting new space for us.
Mm. Okay. And how many facilities are you currently running? Are you a
So
part of
right now
now?
we have the one that's 32 beds, and then we have a group within our group that's running. I think there's up to 7 homes now in Dallas, and those
Okay.
ones are like 8 to 12 in a home. And again,
Mhm.
it's where they bought a 5 bedroom home, renovated it, made it handicapped accessible. You have to put in all of the fire systems and safety systems, and they're running it more as a home network. And
Mhm.
so they'll have people on site at each home, but they'll have other people that will travel around for their care and things.
Okay. So now, setting up that system for assisted living, that's a whole build out,
Yeah.
as you said. Now, the construction side of it is going to be a little different than you would if you was just renovating a apartment building, or talk to the people about how that renovation side of it looks.
Yeah. So again, somebody had built one and they
Mhm.
weren't a good operator. Again, you got to be a good operator, and they ended up
Right.
losing their license. And so we bought it. It was built in 2020, so it's like 6 years old. They purposely built it. And then
Okay.
on the other side, we're finding homes that are convertible, and those convertible homes were able to convert the home and then turn it into assisted living facilities. So there's lots of different ways, and there's folks, of course, that do bigger developments. We're not into that space at this moment in time. We're more into the small care units.
Okay.
But there are some that are much bigger.
So are you government funded or
No,
for
no, it's all individual pay. Our system,
okay.
all individual pay.
For our listeners out there, they may say, "Man, how is a family coming along and paying $6,000 a month for
Yeah, again,
an
it's a
individual?"
lot of money, right? So
Yeah.
again, normally what will happen is mom or dad will have to sell their home because they can no longer live in it.
Hmm.
Usually they'll come and live with the family for a while and they'll realize they can't take care of her or him. That it's just gotten too much. So what they're looking for is they're looking for something that's more of a community feel and they're putting them there. Now, again, we're serving a certain niche, right? There are other large facilities and different things. So it's just, there's again, the beautiful thing about commercial real estate is there's probably about 20 ways to do senior assisted living.
Yeah.
And we're just doing maybe two or three of them.
Oh, okay. Okay. Now, somebody who want to get started in assisted living, what would you tell them they need to do to actually get started?
So again, I'm encouraging people to passively invest with people that know what they're doing. Um,
Absolutely.
that's what I'm looking, saying you need to find somebody that has some experience in the space, that you know what they're doing, and they're an experienced operator, right? So you want to look for people that are doing this. I actually don't recommend, unless you have a very unique skill set, that individuals go out and start their own assisted living, right? It is the hardest space within commercial real estate because of the amount of care that has to happen, right? Super challenging. So again, you know, I don't recommend people go out and start them. I recommend people find people that are doing them, invest with them, and then you can, again, if you can double your money in 5 years by investing in something that provides a real community service.
So you guys are actively looking for additional partners
We're
or
always looking for investors.
okay.
And that to come and invest. That's my role. I look for people, I educate people. That's why I agree to come on these things.
Mhm.
I like to educate people and then I help them passively invest so that they're not the ones that are having to do it. At some point, somebody may decide, okay, I've learned enough. I always say you should start as passively investing and kind of learn before it's kind of the first stage, right? And
Mhm.
again, that's the most complicated space. If you want to go out and again, commercial real estate is anything more than 5 doors and above, so not a fourplex, bigger than a fourplex. If you want to go
Right.
buy a small apartment complex, you could probably do that on your own. But if you're getting into what we're doing, which is buying 100-door apartment complexes, you need a team.
Mhm. Okay. And how do somebody, let's say if I wanted to reach out to you,
Yeah.
and how do I even find a person to actually start and to
Yeah.
become
So
a
again,
passive?
if you're interested in passive investing, you need to start looking for people that you can connect with, people that offer education. So we do free webinars. I do a lot of podcasts. The easiest place to find me is LinkedIn. You just have to remember the K in front of my name, K
Mhm.
Trevor Thompson, because that's how I am on LinkedIn. And just reach out and say, hey, I saw you on Donald's podcast. I'd like to learn more. That's what my thing is. I have a personal goal to help 100,000 people reach financial independence through real estate investing.
Oh,
And that doesn't
wow.
mean 100,000 people are going to invest with me. What I
Right.
don't want to do is have somebody wait till I was 58 years old before I realized I could passively invest in commercial real estate. I
Okay.
don't want people to wait that long. I want them to start investing much younger because that's how you create a millionaire, right? If you
Right.
can keep growing and compounding your money.
Right. So let's say you got a 20-year-old that just came home from college. They struggling finding a job in the field that they went to college in. What would you tell them as opposed to they came to you and say, "Hey, look, Trevor, I want to get started. I'm just confused. I don't know what to
Well,
do. I
so
got
again, that person's really hard because again, I look for people with money.
okay.
And so I'm going to tell that college person, go and get a really good job, save 20 to 30% of your wages, and then
Mhm.
start passively investing it so your money goes to work for you.
Okay.
On the other side of real estate, if you're going to be young and you want to get there, then you're going to have to do house flipping or different things again, which is very risky, but you need the capital, right? A minimum capital for us is about $50,000. So I'll tell them, hey, go get a job, save $10,000, $20,000 a year, and then start putting that money to work so that someday you don't have to keep going to work.
Okay.
Um, but somebody starting out, they're going to have to go through looking for wholesaling or flipping because that one you can normally do. It's more of a no money or little money down game. What I'm
Mhm.
in is I'm looking for people that are successful in life, have this money, but it's all tied up in the finicky stock market and start putting it into real assets. That's what I do.
Okay. So and you're right, with and it's good for them to actually go do some wholesaling or do some type of real
Yeah.
estate transaction. That way they have a better understanding how the real estate market works.
That's right. And then go look in your note, just go to meetup.com, Eventbrite, and look for real estate meetups in your area and
Mhm,
start connecting with people, right? That
mhm.
that's a lot of people want to just sit there in their computer and have it come to them. Uh,
Right, right.
this is a relationship-based business, right? So find out who has online webinars, who has meetups that I can attend, who offers free education, and start going to those and connecting with people. Because again, you may find somebody who says, well, hey, young person, you're exactly who I need. I got this deal, but I don't have the time. Could you do this for? And then you start getting in with some sweat equity.
Mhm.
That's the most important thing.
So now let's say that that same 20-year-old finds a 100-unit building and he comes to you and says, "Hey, I got this building, really don't know what to do. I don't have the money. I want to stay in the deal. Uh, can I give you the deal and then I do, take 10% or whatever?" I'm just using that for an
Yeah.
example.
So the short answer is they could. The real answer is the person with a 100-unit apartment complex worth $10 million isn't going to talk to some kid and put it under contract. I'm
Right.
sorry, because these are bigger deals, right? That
Hmm.
person may be able to find a fourplex or a sixplex or a 12plex where some family, you used to own it, you turned it over to your kid, they don't really want it, they're not managing it. And all of a sudden, your friend or the young person meets them and says, hey, I'm sick and tired around this apartment complex. It's driving me crazy. That's where the kind of sweet spot is for a young person, but they're not going to be able to walk into somebody that owns a $10 million apartment complex and say, hey, can I tie this building up so I can sell my contract to somebody else? It just doesn't happen in the big space. It happens in the smaller spaces.
Hmm. But if they did find something like that and they wanted you to come to you with it,
So
is
normally
that
they would have a finder's fee, and
okay?
finder's fees are like, again, a couple of percent because the numbers are big.
Okay.
Yeah.
So now I think of passive investing as bringing somebody in that has a 401k or a retirement account, some form of retirement funds, and they getting like 3%, 4% at best. They
Yeah.
doing good if they get 4%, and they decide that I want something better. And they look you up and they find you. Do you guide them through the steps on what they need to do with the to get those funds available for
That's
you?
correct. So again, if you are currently employed, your employer is not going to let you move those funds.
Mm,
It's just the way it is. It's unfortunately America is, and retirement plans are rigged. Everybody but you make money on them. But
right.
when you leave a job, then when you leave that job, they will release the money. And then what you would have to do is put it into what's called a self-directed retirement plan. And then so you have to transfer it over to a self-directed retirement plan, and then you can use those funds.
Okay.
Now, let me give one other piece of advice while I'm doing it. If it is at all a possibility to you, convert it to what's called a Roth retirement fund. And the difference is, okay, so when you put money in a traditional retirement fund and you invest with it, you're investing tax deferred. So it's earning money during the period tax-free, but when you pull it out, it's taxable. So again, let's say you invest $100,000, I turn it to two. You invest the two, I turn it to four. You invest the four, I turn it to eight. You invest the eight, I turn it to $1.2 million. That's a lot of money.
Hmm.
But if you prepaid the tax, you would actually be earning $1.1 million tax-free. Think about that. You'd earn $1 million tax-free. Where in the world can you earn them
Can you?
tax-free? And again, it takes you 20 years to get there. I get
Yeah,
it.
yeah.
But earning it tax-free. So again, people will think, well, why would I pay a $20,000 or $30,000 tax bill to convert it? That's why, right? Because you want
Hmm.
to think about 25 years from now when you're real estate investing. Don't think about today.
Okay. So now, if you can go back in time before you started real estate, what would you do different, and what would you have tried to improve on, knowing what you know now?
So the number one answer to that is I wish I'd have started earlier,
Hmm.
right? The best time to plant a tree is 20 years ago. The
Right.
second best time to plant a tree is today. So if
Right.
I had planted my tree 20 years ago, I'd have a lot more money working for me, right? Because it
Hmm.
would have kept growing and compounding.
Right.
So the number one advice is I've never met a real estate investor that says, I wish I'd have waited. They all
Mm.
say, I wish I'd have started earlier. So
Right.
again, the advice is even if you're just starting small, start early, start growing that money.
Mm.
And then I think the most important thing that people need to know is who you give your money to is more important than where you put your money. Because
Mm.
again, there's a lot of real estate syndication groups out there. And you want to make sure that you're investing with people that you know, like, and trust. And that's why I'm telling you, start going to real estate meetups, start connecting with people in the space, start getting to know the different people. That way you're sure that you're giving your money to people you know, like, and trust.
Now, what markets are you in?
So we're mostly in Texas, but we have assets in North Carolina, South Carolina, and Colorado as well. But our group is Texas based, and so about 80% of our assets are in Texas, just because this is where we're based.
Okay. Okay. Now,
And Texas is a
someone who
great
has a
market.
lot.
Everybody's moving here. Thank you, California,
Yeah.
for sending all your folks to us. And if you're living in Florida, thank you, New York, for sending all the people who, it's been great for real estate. These I don't want to get political, but
Right.
um, pro business, pro landlord, pro friendly states, Texas and Florida, North Carolina, here we come.
Right. I love it. Now, somebody that has a savings account, which I just spoke to a guy a couple of days ago that has a savings account, and he's thinking his savings account is the best place for his money. And I told him if you get earning 1%, you're doing good. What would your conversation be for a person that has a savings account and has $300,000 in it?
Yeah. So again, if your money's sitting in a savings account, you're going backwards. Okay.
Mm.
Because inflation is higher than you're earning. You're not even keeping pace with inflation, right? Where we're talking about, double digit returns on your money. Again, savings accounts are very safe. And everybody should have some sort of safety net to where if all of a sudden life changed, they're not in a dramatic situation. Because when you do invest in our syndications, your funds are tied up 3 to 7 years. So you can't all of a sudden decide, well, I need them now. So again, but if your money's in a savings account, they always said cash is king, but cash is trash.
Right, right.
Because if it again, you got to remember what I'm trying to say is you want to start making enough passive income so that you no longer have to go to work if you don't want to, right? You want to
Mhm.
have if you don't put your money to work for you, the second you stop working for your money, you're in big trouble because there's nothing
Yeah,
working. There's nothing
right.
coming in. So if you got $300,000 there and you took 200 of it and left 100 for your safety net, and you could double that 200 to 400 in 5 years, and then take that 400 and grow it to 800. And just get you this math, take that 800 and grow it to 1.6 million and grow 1.6 million to 3.2 million. Oh, do you want to have that $300,000 sitting in a savings account is probably going to be worth four or $500,000, and I'm talking it being worth $3 million. You got
Yeah.
to start thinking about putting your money to work and then having it continue to work, right? Money will work really hard if you leave it working, right? Warren Buffett's the perfect example of that. I turned 65 a couple of years ago, and somebody sent me a text that Warren Buffett created 90% of his net worth after the age of 65.
Wow.
90% big. You know why? Because the
Wow.
man believes in compound. His
Yeah.
money, he didn't take it out.
Yeah.
He doesn't leave it in his savings account. It's always earning some sort of dividend, some sort of return. It's always growing.
Right. And when you look at the banks and what they're doing, they taking their depositors, they're taking their money and
Yep,
making money off of it. So why
yep,
would you leave your money sitting in a bank and you can do the exact same thing that the banks are doing?
yeah.
So I totally agree with it. So you said earlier you had training for individuals. How can somebody go in and find out more about your training?
Yeah,
And
so again, if you connect with me on LinkedIn,
mm,
I can connect you. So I do it the second Tuesday. I do a free webinar. I also post a lot of educational material. I also have a YouTube channel. Massive Capital has a YouTube channel. We put a lot of information up on those spaces. All of the webinars we've done over the last 3 years are all uploaded to our YouTube channel,
okay.
sorted by topic. And again, when I first started this, I used to sit down, I used to sign up for everything and sit in the morning and listen to a webinar and drink my cup of coffee while I listened, right?
Mhm.
And I listened to a lot of webinars because I wanted to learn.
Right. And when you're in your car traveling instead of listening to the radio, turn on one of those podcasts you have or turn on one of
Or
the
an audiobook. I'm a big
yeah.
audiobook guy. I do about 80 books a year.
Oh wow, that's amazing.
Yeah, I do a lot of books.
Okay.
The second I get in my car, it starts talking to me.
Oh
And
wow, okay. I'm
yeah,
the same way. And
yeah.
you find those good ones that you listen to over and over again and you see bits and pieces that you
Oh,
might
and
have
I love
missed.
them. I'm a repetitive. So if I really enjoy a book, I'll make sure within the next 3 months I read. Because again, when you're driving and you're thinking, you're doing stuff, you're not catching everything, right? So I
Right.
may listen to a book like I listen to Grant Cardone's 10X or
Okay.
Be Obsessed or Be Average back to back at least twice a year. It's the
Wow.
best audible book if you want just to get a good kick in the butt.
Yeah. Yeah, and he does have some good books out
Yeah.
that most people don't even realize how some people most people think he only has like one or two books. He has quite a few books
I
out.
think he's got
That's
about
pretty
10
good.
now, but those are my two favorites.
Yeah.
And there's lots of good books, lots of good
Yeah.
books.
Yeah. So now what's the YouTube channel that you have? It's
It's
is
my name. So you
oh,
just look
oh
up my
okay.
name. Yeah,
Okay. Just type your name in and then
yeah,
it'll come up.
should be able to find it.
Okay. Well, I think you gave the folks some really great information, and you guys that's looking to actually get in real estate, you want to be a passive investor, go ahead and hit them up, and I think you guys will actually and listen in on the second Tuesday of every month and listen to his training. It's going to be great for you guys. I think he has his foot solid in the ground and you need to start with a solid foundation. And he has that foundation for you guys to get started. So go to his YouTube channel and go and check out his LinkedIn page and check out his training. I think you guys will be more than excited to actually jump right into it.
Awesome. Thank you, sir.
What's some last words you would like to leave anybody?
Don't wait to buy real estate and wait.
All right. Thank you, sir. I appreciate you.
Thank
Um,
you.
That's a wrap for today's episode of the Real Deals Real Estate Show. If you found value in this conversation, make sure to follow, subscribe, and share it with someone who needs to hear it. Until next time, stay informed, stay prepared, and keep moving forward.